Let's jump right into this explainer, because today we're unpacking something genuinely fascinating. We're looking at a highly confidential July 2026 business plan, and its main goal is proposing a specialized financial company built specifically to fund Ukraine's defense industrial complex. This isn't just about money. We're literally looking at the mechanics of modern survival.
Imagine for a second you're a brilliant engineer. You've built a piece of tech that is out there, right now, saving lives on the front lines. The state loves it, and they give you massive orders to build thousands more. But then you walk into a bank to get a working capital loan for the parts, and they flat out say no. It's kind of the ultimate, slightly absurd paradox of wartime economics, right? These defense startups have guaranteed life-saving orders, yet traditional banks won't lend them a single dime to actually build the products.
So, to understand how this blueprint actually solves the crisis, we'll quickly trace the defense tech boom, explore this concept of the missing middle, look at why banks can't lend, unpack the specialized solution, see who gets the money, and finally, talk about keeping that innovation at home.
All right, starting off with Section 1, the defense tech boom, from state monopoly to private market.
Over the last few years, we've seen Ukraine's defense sector completely transform. It went from the slow-moving state-owned monopoly into a hyper-dynamic private market. We're talking agile tech startups and incredibly brilliant engineering teams. But here's the massive bottleneck. Demand vastly outpaces production capacity. These private companies, they have products that are rigorously combat-tested, they've got verified demand directly from units at the front, but their physical ability to scale up and actually build more is severely paralyzed by a totally mundane problem, a lack of working capital.
Which brings us to Section 2. The missing middle, or the valley of death for defense startups.
So this is the absolute core conflict identified in the business plan. It's a fatal funding gap, what industry folks call the valley of death, where highly capable defense companies just die out. See, on one end, early-stage prototypes survive on grants and venture capital, and on the other end, massive, established manufacturers can easily access state bank loans and heavy government programs. But there is a glaring, massive hole right in the middle for mid-sized startups, the ones that have passed the prototype phase and desperately need cash to rapidly scale. These mid-sized companies are essentially trapped in an unserved middle market. They've got real demand, actual combat verification, but what they don't have is years of audited financial history or hard collateral, like, real estate, that standard civilian banks absolutely demand. Because, ironically enough, a bank prefers the deed to a building over the actual missile defense system that protects that building. It's wild, but they are totally stuck.
And that leads us perfectly into Section 3, why banks cannot lend. It's a classic square peg, round hole scenario.
Now, I know it's super easy to just paint traditional banks as the bad guys here, or to say they lack patriotism. But honestly, their refusal to lend is a rigid regulatory reality. Banks, especially the ones with foreign capital, face massive structural roadblocks. They're basically blocked from direct weapons financing due to strict ESG, meaning environmental, social, and governance mandates. Plus, they face immense compliance red tape, and practically speaking, a lot of them simply don't have the highly secure, secret infrastructure required to even process classified military contracts.
So let's actually break down this fundamental square peg, round hole problem. Civilian banks require 3+ years of audited financials, right? But defense startups, they have a short history of rapid pivoting. Banks want real estate for collateral, startups have secret contracts and imported parts. Banks need open, transparent data, but startups are operating with highly classified information. They are literally just speaking two entirely different languages here.
So how in the world do we fix this? Well, Section 4, the specialized solution, a regulated financial intermediary.
The business plan we're looking at proposes a really specific structural fix. It suggests creating a specialized financial company fully licensed by the National Bank of Ukraine that essentially acts as a bridge. This intermediary steps in and translates state orders and technical verification data, stuff like the data from Brave 1, Ukraine's state defense tech cluster, into acceptable credit decisions. By doing this, it gives traditional banks a clear way to participate, maybe as shareholders or guarantee partners, without them having to directly underwrite weapons manufacturing themselves.
But here's the absolute crucial point you need to take away. This is not a charity fund. And it's not some clever loophole designed to bypass banking rules either. It's proposed as a strictly regulated lending institution. It's got its own risk appetite, its own capital reserves, and strict oversight from the National Bank. It's basically bringing rigorous banking discipline straight into wartime realities.
Moving on to Section 5, who gets the money? Defining the target client. So the business plan actually does something pretty radical here. It completely redefines what a good borrower even is. Under this new model, you aren't judged by flawless corporate spreadsheets. You're judged by your proven combat utility, your technical verification, and your confirmed state orders. Meaning, if you've got a combat-tested product and a verified order, but absolutely zero traditional financial history, you are exactly the kind of client this institution is built to serve. And the credit itself is issued to fuel a very exact, incredibly tight production cycle. Check this out. Step 1, you secure the order. Step 2, you receive the loan specifically for working capital. Step 3, import the parts and actually manufacture the unit. Step 4, deliver it to the front lines. And finally, Step 5, repay the loan directly from that government budget payment. It literally takes a confirmed order and turns it into a funded, delivered reality.
And, this client base is surprisingly diverse. We're talking about direct state contractors making up 30%, manufacturers of dual-use technologies at 25%, verified innovative Brave One vendors at another 25%, and then even those gearing up for lucrative joint export ventures at 20%. So it's really a holistic approach to funding the entire defense ecosystem.
Finally, Section 6, keeping innovation at home, and the massive real-world stakes involved if we get this wrong. The source text issues this incredibly stark, powerful warning. Basically, if financial infrastructure doesn't keep pace with the manufacturers, the value bleeds out to other countries. Without capital, successful defense startups are going to do what literally any rational business does to survive. They'll migrate to foreign jurisdictions just to get bank accounts and scaling capital. The harsh reality is, if you don't fund them at home, they will leave to find someone who actually will. But providing that rapid credit and working capital locally, that creates an overwhelming economic argument for these manufacturers to stay put. It ensures that their intellectual property, their tax revenue, their brilliant engineering talent, and ultimately their post-war export capitalization all stay anchored right exactly where they were born. So ultimately, bridging this financial gap, it's not just about immediate wartime survival, as critical as that is. It is about cementing a robust, globally competitive defense tech infrastructure for the future. It's about ensuring that the nation that's actually testing and proving the tech in combat is the same nation that benefits from it long term. As we've seen unpacking this business plan today, the mechanics of capital are truly the hidden engines behind national defense, and it really leaves us with a profound question to chew on. Is financial infrastructure just as critical to national defense as the physical weapons themselves? Honestly, it makes you wonder, how many other vital, life-saving industries are out there right now, stuck in their own valleys of death, just waiting for a bridge? Thanks for diving into this explainer with me. I hope it helped you see the hidden gears turning behind the headlines.